In this video, I'll talk about 5 things to know about EVERGRANDE. Don't forget to subscribe. Let's head into it. The world is still waiting to find out what will happen to troubled Chinese conglomerate EVERGRANDE and its enormous mountain of debt. The property developer's debt crisis is a major test for Beijing. Some analysts fear it could even turn into China's Lehman Brothers moment, sending shockwaves across the world's second biggest economy. Real estate and related industries account for as much as 30% of Chinese GDP. Last week, investors experienced whiplash as the firm met one crucial debt deadline, but then failed to address another. Shares shot up one day and down the next. The coming days and weeks will be critical. So far, EVERGRANDE has failed to publicly address 2 interest payments on bonds over the past week. That's fueling speculation over what could happen next, with potential outcomes including a Beijing-backed bailout, restructuring, or default. Here's what you need to know about EVERGRANDE and how it got to where it is now. What is EVERGRANDE? EVERGRANDE is one of China's largest real estate developers. The company is part of the Global 500, meaning that it's also one of the world's biggest businesses by revenue. Listed in Hong Kong and based on the southern Chinese state of Shenzhen, it employs about 200,000 people. It also indirectly helps sustain more than 3.8 million jobs each year. EVERGRANDE made its name in residential property. It boasts that it owns more than 1,300 projects in more than 280 cities across China, but its interests extend far beyond that. Outside housing, the group has invested in electric vehicles, sports and theme parks. It even owns a food and beverage business, selling bottled water, groceries, dairy products, and other goods across China. How did it run into trouble? In recent years, EVERGRANDE's debts ballooned as it borrowed to finance its various pursuits. The group has gained infamy for becoming China's most indebted developer, with more than $300 billion worth of liabilities. Over the last few weeks, it's warned investors of cash flow issues, saying that it could default if it's unable to raise money quickly. That warning was underscored this month when EVERGRANDE disclosed in a stock exchange filing that it was having trouble finding buyers for some of its assets. But the group's struggles are also emblematic of underlying risks in China. The issue isn't entirely new. Last year, a slew of Chinese state-owned companies defaulted on their loans, raising fears about China's reliance on debt-fueled investments to support growth. How is it trying to move forward? The company somewhat placated investors last week after saying that issues regarding a payment on a domestic yuan bond had been settled through negotiations. The amount of interest it owed on the bond is about $36 million, but many questions will still remain unanswered. EVERGRANDE did not elaborate on the terms of the payment, and interest worth $83.5 million on a dollar-denominated bond also fell due last Thursday. That deadline came and went without an update from the company. The firm also announced Wednesday that it would sell part of its stake in a local bank for roughly $1.5 billion, raising some much-needed cash. But instead of going towards its outstanding bond interest payments, the money will likely be used to settle its debts with that lender, Shenzhen Bank. The conglomerate said it would still hang on a 14.75% stake after the deal closes. EVERGRANDE faced another bond interest payment of nearly $50 million Wednesday, just noon local time on Thursday. It has stayed silent on the status of that debt. On September 14, EVERGRANDE announced that it had brought on financial advisors to help assess the situation, while those firms are tasked with exploring all feasible solutions as quickly as possible. EVERGRANDE has cautioned that nothing is guaranteed. So far, the conglomerate has struggled to stem the bleeding and has failed to find buyers for a part of its electric vehicle and property service businesses. As of that filing, it made no material progress in its search for investors, and it's uncertain as to whether the group will be able to consummate any such sale. It said the electric car company has addressed how those challenges have trickled down, with a disclosure this week that it was having trouble paying suppliers. It also called off plans to sell new shares in Shanghai. On top of that, the group has been trying to sell off its office tower in Hong Kong, which it bought for about $1.6 billion in 2015, but that has not been completed within the expected timetable. It said in mid-September. How are investors reacting? EVERGRANDE's problems spilled onto the streets this month when protests broke out at its headquarters in Shenzhen. Footage from Reuters showed scores of demonstrators at the site last week, accosting someone identified to be a company representative, but shareholders have been wary for months. The stock has shed nearly 85% of its value this year. The situation also appears to be spooking investors in China more broadly, at a time when they're already reeling from Beijing's crackdown on private sector companies, specifically in the tech sector. Stocks in Hong Kong, New York, and other major markets have been swayed by fears of contagion from EVERGRANDE and a slowdown in Chinese growth. What could happen next? The Chinese government appears to be starting to intervene. Over the past few days, the People's Bank of China has injected some cash into the financial system to help settle nerves. On Tuesday alone, it added approximately $15.5 billion, saying it was to keep liquidity going. In a statement this week, the central bank also vowed to maintain the healthy development of the real estate market and safeguard the legitimate rights and interests of housing consumers. It doubled down on the message Wednesday in a meeting jointly held with regulators, where authorities emphasized the need to use real estate as a short-term tool for economic stimulus, according to a central bank statement. Officials also directed the financial sector to focus on stabilizing land and housing projects, adding that institutions should work with local governments to jointly maintain the steady and healthy development of the real estate market. Authorities are clearly watching closely, while attempting to project calm. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. With that, I'll see you in the next video.